Yeah, we've got to talk about zombie mortgages because while zombies, they're not scary because they're just in movies, zombie mortgages are fucking terrifying because they can actually come back from the dead to take your home. And the scarier thing is that some of you may think this is not relevant to you, but you should think again because neither did the people in this story. And to properly explain this, we got to take a trip down memory lane to the fall of 2008.
What in the world is happening on Wall Street? 21%.
Because we're now down 43%.
Traders here working the phone say a lot of their customers are freaked out.
On the NASDAQ, everything and more has been completely wiped out.
It was the worst day on Wall Street since the crash of 1987.
The housing bubble, it finally popped, threatening millions of Americans with foreclosure. Because of course, mortgage lenders, they went nuts for years. They were throwing cash at anyone who would take it, even people with shit credit and no savings. And one of the ways they preyed on the least creditworthy borrowers was to bypass the normal requirement for a down payment altogether. And doing this by concocting something called an 80-20 loan, where one loan covers 80% of the home's value and the other loan covers the remaining 20%. But starting in 2007, the adjustable rates in those loans, they kicked in, spiking monthly interest payments way beyond what any subprime borrower could afford. So people defaulted, banks collapsed, and the American economy went belly up. But to save some people from foreclosure, the federal government created a loan modification program. Right? And so people who enrolled got the interest rate on their first loan, the 80% one, lowered back down. And they were told that second loan, right, the 20% one, that was forgiven, written off, or just rolled into the first one. You know, after not hearing anything about it for some 15 years, they figured, hey, it's really gone. But in fact, what they didn't realize is that it had only gone dormant, with debt collectors or other investors buying up that old debt for pennies on the dollar, you know, just quietly sitting on it until home prices rose, which notably they have been over the past few years, with them then launching a surprise attack on the homeowner with an exorbitant bill in their mailbox, retroactively packing on interest payments and late fees that they had no idea they were even supposed to pay all these years, right? Inflating the debt 2 or 3 times its original value, which is exactly what happened to one homeowner who told ABC.
They said, you are no longer liable for this debt. We will update your credit.
Just a few months later, that same loan showed up again. She owed $139,000.
I get a notice of default and hundreds of realtors calling me about my house saying, do I want to sell it? It's pre-foreclosure.
Which is why these second loans are called zombie mortgages.
It's like a horror story, right? They're coming back to haunt you from the dead.
Now, foreclosures, they're hard to track, so quantifying the scale on this is difficult. But with that, NPR looked at several states where the data is available, and the numbers are scary. Right? In New York, for example, foreclosures have been initiated on at least 10,000 zombie mortgages in just the past 2 years, with another 500 showing up in Maryland. You know, the debt collectors, they're making money hand over fist doing this because they're paying nothing, maybe several $1,000s for several $100,000 properties, which is why many of the victims have told reporters it feels essentially like highway robbery. Right? I mean, you have people who have lived in these homes for up to 20 years, who have raised families in them, made memories in them, planned futures in them.
I'm on the brink of losing my home over a simple piece of paper. Had they have sent me a paper every month stating, this is still here, hey, you owe this, I would have paid it. It's horrible thinking I could be out there homeless.
The very big thing is that all of this is completely legal, though that's not to say that you can't get a lawyer and fight back. Or depending on the details, you may be able to claim that the debt collectors violated certain regulations by not notifying you about the interest payments, which is why if you have or had a second mortgage, listen to this foreclosure prevention advocate who spoke to Fox News.
You have to check your title report. If you have a second that you think is paid off, you need to make sure it was reconveyed. If you think it was not even just paid off, if you think it was just wiped out, it may still be there. You need to check your title. People don't check their credit reports as often as they should. They certainly never check their title reports, and that's the only place it's going to show up until you get a letter saying, hey, please give us an outrageous amount of money before we come take your house. The zombie mortgage business was primarily, for about 10 years ago, it was nothing but bottom feeders. Now it's publicly traded companies that are getting involved with this, and all they do is deliver misery.
Which is why ultimately, like, the only long-term solution here is the legal solution for state attorneys general, federal regulators, and most of all, politicians to get involved. Because otherwise, for a lot of people, this is just a horror movie with no end.